Hello, hi, my name's Adil. We're bringing you a review of the European markets, doing an intra-week, intraday summary as to where we're heading next. Okay, so basically, just I always start as you always know. I trade based on intermarket analysis, so I always summarize the fundamentals first before in order to gauge the direction or the basically in order to gauge the direction and gauge the sentiment, etc., which way the market's heading. Right now, the bias. Okay, the bias with regards to Europe. Okay, so the QE factor or the Russia-Ukraine peace talks, etc., all have all been factored in here. Okay, from my perspective, given the fact that the German DAX is now into its 75% fib and is into previous support equals resistance, so all that has been factored in. Okay, so all the good news out of Europe, etc. The QE, well, no good news really, but basically any hopes of de-escalation with regards to Russia-Ukraine, that's been factored in. Any dovish monetary policy certainly been factored in. Now what's going to dictate is the fact, and also that a weaker euro certainly has been factored in. Now one can argue, given the fact that Mr. Draghi's, well, according to Schäuble, he states that Mr. Draghi was misinterpreted. Mr. Draghi was trying to focus more towards fiscal policy as opposed to monetary policy. So basically, that's the only way we can understand and explain the movement higher on the euro post weaker Italian GDP data, weaker inflation data out of Germany, and obviously weaker economic data out of Germany too. Okay, so that's the only way we can explain that. Okay, otherwise the euro would certainly have fallen further. And obviously that's not the case. Now also one of the reasons why the euro could obviously propel high from here is if there are any signs of a de-escalation, etc., etc., that obviously propels the euro higher. The equity markets have obviously factored that in. The euro certainly needs to factor that in. Add in the fact that the euro was weighed down by Mr. Draghi's dovish comments last Friday, and now that Mr. Schäuble is saying that people have misinterpreted him, i.e. he is not as dovish as everybody expects him to be, and obviously the Germans still are not going to accept QE. Therefore, that obviously puts the slant on the euro to the bullish side now. And given the fact that the US dollar obviously is into resistance as well, okay. Even though we had stronger consumer confidence data and we had stronger durable goods data yesterday, the dollar obviously has failed to propel the euro, the Aussie, and the Kiwi lower. So these are all signs or indications that the euro will obviously move higher, and that will obviously affect Europe, especially with regards to it being the export sector, etc., etc., etc. That's the best way of understanding it and seeing it from that perspective. So, okay, so on the one front you have a euro moving higher. On the other front you have the obviously that's going to hurt exports. On the other front you have Draghi being misinterpreted according to Mr. Schäuble. Okay, so that dovish stance, that dovish monetary slant no longer exists. So the QE junkies can no longer ride off the back of that, especially now given the fact that German DAX is into 75% fib resistance. So that all that information put together, adding the fact that Miss Lagarde obviously has got this criminal investigation pending, which doesn't bode well. Adding the fact that the French government has obviously collapsed and there's disagreement between Germany and France with regards to austerity measures, etc., etc. They want to be pro-growth again, so again that creates a lot of uncertainty, so on and so forth. So, and given the fact that the inverted head and shoulders formation has obviously completed itself now, and certainly wants to propel lower. Okay, so add all that information in, add in the fact that the consumer sentiment information out of China overnight was weaker than expected, add in the fact that German consumer confidence is lower than expected as well today, and obviously inflation numbers are slightly dire as well, so therefore no growth, and technically that should be no stock market rally. The only reason why we've rallied is because of expectations of QE, and now that's been flipped on its head. So if you look at it from that perspective, then all that indicates is a southwardly direction. Okay, so that's basically my summary. And given the fact that now we've got, just the last few tweets that I've tweeted so far, past 24 hours, Russian soldiers have crossed the border in armoured infantry carriages and entered Ukrainian town of Amvorosivka. 13 Ukraine soldiers killed, 36 wounded in the last 24 hours. We know Russian plans to block gas transit to European Union countries this winter, etc., etc., etc. So these are not all signs of peace, okay, even though they are talking peace. This certainly doesn't resemble peace, okay. So from my perspective, The bias certainly remains bearish, given the fact that European equities have factored in the perfect scenario. Okay, perfect scenario, factored in the perfect scenario, hence the reason why we've had a short squeeze so far. Okay, now German DAX from a technical perspective, now that I've explained the fundamental outlook or picture, we're into 75% resistance, obviously bear that in mind, so therefore that equals resistance. If you look at the EUROSTOXX have completed its inverted head and shoulders target, therefore short squeeze is over, therefore we go lower. Okay, that's basically how I interpret from a 60-minute chart and obviously into horizontal resistance. Going back to your 60-minute chart, therefore that's risk, obviously a risk-off scenario now. Go to your CAC chart, same concept here. Obviously, if you go to your 60-minute chart, you'll see the fact that we've created inverted head and shoulders target. Obviously, we've hit that now, and now we're looking for a short squeeze lower. Okay, and obviously we've got the unfilled gap below, given the fact that we do have a potential euro rally, whether it be based on de-escalation out of Ukraine, Europe. Although the last few tweets I've stated again, put that into a 50-50 category, or more like Mr. Putin doesn't want peace at all, and he wants to look as if he's calling for peace, or alternatively it's another decoy of his, just like his Russian aid convoys, where the world's media attention was focused on that whilst he was sending his troops over. Okay, so again, these are all factors that you have to take into account, but from my perspective, the euro, it is going to rally based primarily on the fact that Mr. Schäuble's comments of Mr. Draghi being misinterpreted. Okay, so that's basically how we understand that perspective. So that could be another reason why, but from my perspective, the market has factored in perfection, and perfection is certainly not materializing thus far. Okay, right. Now that's the reason from a technical perspective. So if the CAC and the EUROSTOXX have hit their inverted head and shoulders targets, that means the short squeeze is over, therefore no real technical catalyst to go higher, therefore we reverse and move in the opposite direction. Okay, so that's Europe for you. Okay, you can look at the IBEX is into resistance. You can look at the Portuguese, obviously, because you can see a sell-off has already started in that index. Okay, and obviously we're looking to potentially move lower again. Portugal index into resistance, IBEX into resistance, and the FTSE MIB, given the fact that GDP data came out worse than expected, obviously is into resistance as well. So if all those European indices are all aligning together and coming into resistance, then obviously that means one thing: we are heading lower. Now we can confirm that with the FTSE itself. As you can see, the FTSE 100 is into resistance, horizontal resistance as well. Okay, and you can also cross-reference that or verify that with the S&P. Now the S&P has an H&S formation target, so that's your H&S target of around the gap fill level, which gap fill is around 1988. That's the first gap fill that we're looking for. Okay, so we'll see exactly if that transpires. Also with regards to the semiconductors, as you can see, semicons bearish engulfing candle, that's 75% fib resistance. Same thing with the Nasdaq. We can always cross-reference the movements in the DAX with the Nasdaq, which generally tends to be its leader, given that fact that it's got a doji on a daily chart and a 10-minute chart as a head and shoulders formation as well. So what can one conclude from that based on intermarket analysis? That this market is certainly going lower. Now I can certainly resort to the currency markets with regards to Euro, JPY, USD, JPY, and the Nikkei, but I think that will take this video too long. Okay, so I'm going to call it a day there, folks. So just giving you an insight on my views and where I think this market is, especially with regards to Europe. Risk on, risk off, wax on, wax off. Goodbye now.